Welcome to this explainer. Look, if you're in business, you already know we're playing a high-stakes matching puzzle every single month. Did you know that thousands of businesses literally bleed money every month just because of tiny, silly data entry errors? We're talking about the absolute critical importance of GST reconciliation and how ensuring your GSTR1, 2A, and 2B data align perfectly is the ultimate key to business compliance and, more importantly, securing your input tax credit or ITC.
So let me ask you the million-dollar question. Are hidden mismatches quietly costing your business its input tax credit? Think of GST reconciliation as a massive jigsaw puzzle. When your business records don't perfectly match the government's portal data, your ITC gets blocked. Those tiny, seemingly invisible data mismatches, they are the villains standing between you and your hard-earned cash.
To get a handle on this, we're going to walk through why reconciliation matters, how to align your GSTR1 data, decode the tricky GSTR2A puzzle, secure your ITC with GSTR2B, and finally, take back control using IMS. We're going to break this all down logically so you can get things sorted.
All right, let's jump right into Section 1, why GST reconciliation matters.
Basically, GST reconciliation is just the process of making sure the data in your accounting books perfectly mirrors the data recorded on the GST portal. I want you to think of it like a literal mirror. Any discrepancies, any little mismatches are essentially cracks in that glass. And those cracks, they lead to massive compliance headaches and, you guessed it, lost credit.
So, how do we fix those cracks? Well, you've got a universal action loop you're going to use across all your return forms. First, you hop onto the government portal and download your return file in JSON format, which is really just a standard text file. Because these files are pretty huge, they arrive zipped, so step 2 is unzipping that file. Step 3, you import that JSON straight into your accounting software, and step 4, you let the system run the reconciliation to check for any mismatches. You'll repeat this exact loop whether you're looking at outward or inward supplies.
Moving on to Section 2, aligning your GSTR1 data.
When it comes to outward supplies, honestly, this is usually the easiest piece of the whole puzzle. Think of Side A as the data you exported right from your accounting software, and Side B as what ends up on the GST portal. Since your software literally generated the file that was uploaded to the portal in the first place, these two sides should be a flawless, unbroken mirror. In fact, mismatches here are super rare. Like, they pretty much only happen if somebody accidentally messed with the offline software data after the filing was done, or if someone actually logged into the portal and manually tweaked the tables. If you do find a crack in the mirror here, the fix is incredibly straightforward. Just revise the return on the portal or rectify that offline entry in your software so they match up again. Easy enough, right?
Let's dive into Section 3, decoding the GSTR2A puzzle.
Okay, we covered what goes out, but what about what comes in? This is where things get a bit more wild. When you run that JSON import loop for GSTR2A to track your inward supplies, it's pretty common to see an invoice sitting right there on the portal, but it's totally missing from your accounting books. The solution here? Just record it. Often, your supplier was just totally on top of their filing, and you simply forgot to log the invoice into your system. Once you enter it, boom, you achieve a perfect match.
But what if your books and the portal do have the same invoice, and your software still flags it as unreconciled? Well, often the transactions match fundamentally, like the invoice number and the core amount are spot on, but minor system differences, maybe a tiny rounding issue or a weird character format, cause your software to hit the panic button. When you see this and you know for a fact the core data is correct, you can just use the manual reconcile option in your software to force the match and clear out the error.
Now for the main event, Section 4, securing ITC with GSTR2B.
This is where real money is directly on the line, folks. They say GSTR2B is the gateway to your input tax credit. And honestly, that hits the nail right on the head. Unlike 2A, which is sort of dynamic, 2B is completely static. It strictly dictates exactly what credit you are eligible to claim for that period. So ultimately, your supplier's filing habits? Yeah, they directly impact your business's bottom line.
And whenever human input from multiple parties is involved, you're going to get some chaos. To manage this chaos, we can group the problems into 3 specific mismatch villains. First, you have available only in books. You logged it, but the portal doesn't have it. Next is available only on portal. The supplier uploaded it, but you're missing it. And third, mismatch in return period, where the invoice is in both places, but the filing dates just do not align. Let's look at how tiny human errors actually create these villains.
Take that first villain, available only in books. Imagine you're looking at an invoice flagged with this error, and you absolutely swear your supplier filed it. Take a closer look. Say the original invoice had this massive alphanumeric string, right? But whoever was doing data entry in your office just typed the last 4 digits, maybe 2248, just to save some time. Well, that breaks the entire match. The software thinks it's looking at 2 completely different invoices. To fix it, you just have to update your software with the full, correct invoice string. Or how about villain number 2, available only on portal? Imagine 2 companies under the same umbrella. One is spelled TOBO Digital, registered in Uttar Pradesh. The other is TOBU Digital, registered down in Tamil Nadu. If you accidentally log the invoice under TOBO instead of TOBU, the GST numbers attached to those files won't match the portal. Just one single wrong letter creates a whole new mismatch bucket. Drives you crazy, for sure, but it happens all the time.
So what about our third villain, the mismatch in return period? This usually pops up if you file monthly, but maybe a smaller supplier files quarterly. The portal has the invoice in December, but your books say October. The fix here is super simple. Do not edit the core invoice data. Just identify the transaction, select it, look for a Set Effective Date option in your software, and update that date to match the portal's actual filing month. It instantly flips from mismatch to reconciled.
And finally, Section 5, taking control using IMS.
You know, up until recently, waiting for that GSTR 2B to generate felt like bracing for impact. You're just waiting to see the damage, but not anymore. Now we have IMS, the Invoice Management System, which is basically the ultimate cheat code for this whole puzzle. It's a dashboard right on the GST portal that lets you proactively manage your inward supplies before the GSTR 2B even generates. You review the incoming data and take action. You hit Accept for valid invoices. You reject invoices that have wrong amounts or maybe don't even belong to you. Or if you need to push an invoice to a future filing period, you just click Keep Pending.
But listen up, because here is a massive catch that you literally cannot ignore. If you log in and do absolutely nothing, or ignore the IMS dashboard completely, the system assumes everything is fine. That means if no action is taken, all invoices, even the totally wrong ones, are automatically accepted into your GSTR 2B. So being proactive here isn't just a nice to have, it's a structural requirement if you want your ITC to be accurate.
Which brings us to the final thought for this explainer. Your GSTR 2B is generating soon, and the deadline is always creeping up. The real question is, are your books actually ready to match it? Have you fixed those tiny spelling errors? Have you checked your effective dates? Take the structured reconciliation steps we covered today, go apply them to your software right now, and make absolutely sure you aren't leaving your hard-earned input tax credit on the table. Thanks for joining me on this explainer.